Very good afternoon. Let's take a look at the markets. Asian markets traded mostly lower. This as previous optimism around trade talks and deals appeared to reverse. Focus has now shifted to the ongoing trade discussions between the United States and China, with U.S. Treasury Secretary Scott Bessent having met with the Chinese Vice Premier in Sweden with no breakthrough reported as yet. The two parties have given themselves the deadline of August the 12th to see if they can improve their terms of trade, which currently stand at a 30% levy on Chinese goods by the United States and 10% import duty on U.S. goods by China. The Nikkei share average declined by 0.8%. The Hang Seng Index fell by 0.15%, while the Shanghai Composite Index ended the session up 0.33%. Looking at U.S. markets, they were subdued in yesterday's session, with only the Nasdaq making any meaningful gains on the day, hitting an all-time high in the process. While initially celebrating the certainty of trade deals getting done, investors are now trying to digest what the actual impact of the trade deals agreed will be on the global economy. The Dow Jones Industrial Average fell by 0.14%. The S&P 500 ended the session up a mere 0.02%, while the Nasdaq Composite Index gained 0.33%. Looking at the local indicators, we see that the all-share index is currently up 0.6% at 99,339 index points. We see that the local currency is currently trading at 17.94 against the US dollar, 23.95 vis-a-vis the British pound, and 20.76 against the euro. On the commodities front, gold is trading at $3,324 an ounce, platinum at $1,390 an ounce, while Brent crude oil is trading a little bit shy of $70 a barrel. All right, let's get into it now with Martin Smith. He's a portfolio manager at Anchor Capital. Thanks very much for joining us, Martin. So market players are said to have moved on from the recently agreed US-EU trade deal and are now looking ahead to the US Fed's decision on rates, as well as non-farm payroll data that should come out on the 1st of August, as well as the earnings season, of course. What are your observations?
Yeah, I think we're kind of going headline to headline at the moment. Inflation, which they do kind of via interest rate, also have to make sure that the labor market is strong and intact and all of those things. So, like you mentioned, you've got the Fed's rate decision tomorrow, which we think will be unchanged. We won't see any cuts, much to President Trump's dislike. I know he wants cuts to come a little bit sooner than later. And then you've got the non-farm payrolls on Friday, which are the monthly non-farm payroll numbers, which are the big important ones. You obviously get weekly ones, but the ones that you need to focus on are the monthly ones. And I think we're looking at about 100,000 jobs being added, which isn't a massive amount that the market's looking for. When the US economy is really going, they're adding around about 250,000 jobs per month. So achievable, but I think the market would look very much towards what that actually looks like, and if that labor market's still intact, because it'll obviously also inform the Fed. And then, like you also mentioned, lastly, around US earnings season, we're about 40% of the way through that, and so far companies are doing slightly better than what the market was looking for, and in aggregate, the market is looking for about 13% growth from S&P companies and about 20% growth from Nasdaq companies. So quite lofty numbers that they were looking for, but again, nicely ahead. So looking good for now, but there's a big couple tech companies that need to report, and we'll wait to see what the last 60% of companies do before getting too excited.
Yeah, indeed. So what's Anchor's view on the kind of economic impact that a 15% import tariff will have on the countries that have agreed to that level with the United States? Because for me, I suspect that that's quite a very damaging figure for economies either way. Never mind the 30%, which we as South Africa are having to consider as our base case.
Yeah, absolutely. So, I mean, intuitively, you think that it's going to affect growth and inflation, and it does do that, but only really on the good side of things. If you look at the service side of things, it's not really that affected, and that's actually
Unfortunately, we seem to have a problem with Martin's line there, unfortunately. We're going to leave it there. After a short break, Juliet will have more news for you. And of course, we'll have more news for you at the top of the hour. We'll see you in a bit.